Most new business owners open up their QuickBooks, look at their chart of accounts, and have no idea what they're looking at. Hi, welcome to our channel. I'm Steph, a QuickBooks Pro Advisor, certified in QuickBooks Online. And today in this video, I'm going to show you what accounts you need and what accounts you don't. In the last video, we were focusing on solopreneur, which is a sole proprietorship, and we were setting up the QuickBooks Online account for that industry. The account that we created was for a marketing consulting firm, and the chart of accounts that we're going to focus on setting up today is geared to that business type. Okay, so when you open up your QuickBooks Online account, you're going to see the new interface. It's going to say good morning. You're going to see the dashboard here and how we get to our chart of accounts. In our new company, our no-name company, our fictitious company that we set up, we're going to go to accounting and then chart of accounts. And that's going to bring us to our chart of accounts with all of our accounts in it. Now, I had to switch the file because the file that we set up didn't have anything in it. And for the sake of time, I had to go to the file that had some kind of activity in it. So in the last video, I showed you guys that there was no activity because the accounts wasn't set up. So this file has a little bit of activity in it so that I could walk through and show you the different accounts that you need, the ones that you don't, and how we can take out accounts that you don't need and just kind of customize it to the marketing firm that we set up. So if you see here, we have your assets, and QuickBooks would tell you where that account goes. So you see BAL. That signifies that this account goes on the balance sheet because it is an asset and it's a checking account. Bank accounts are assets. You see all of these accounts here. You will find them on the balance sheet. We're going to go to reports. We're going to go to standard. And then we're going to go to our balance sheet. The accounts are here. You see the assets are checking, saving, your accounts receivable. All of these accounts are signified in your chart of accounts as balance sheet accounts. So I just wanted to show you guys that. Let's go back to our accounting chart of accounts, and we're going to scroll down to the income accounts. So the income signifies that those accounts are to appear on the P&L financial statement. You also have your expenses as well that would also appear on the P&L, the profit and loss statement. For this marketing firm that we set up, we're going to focus on setting up the income accounts that we need for the marketing firm. There's a lot of accounts that you can set up. We're just going to focus on about 2 today to just get you into the feel of where you need to go to set it up and what the account is for. So we're going to do that now. To set up the account, you're going to go to the right of your screen. You're going to click New Account at the top here. And we're setting up a retainer income. You know, someone hires us for month-to-month advice or month-to-month things that we need to do for their business. I got advertising, ads, or so forth. And we have a fee that we charge them each month. So we're going to set this income account up so that when that fee comes in, we can categorize it to this income account. So we're going to name this income account retainer, something real simple, retainer income. And we're going to select the account type. Now we want this retainer income account to be a income account that shows up on the profit and loss. So you see the assets here. We don't want this section because this is for the balance sheet. Now our income right here, this is for the profit and loss, and that's where we want it to show up. We're going to select income, and then the detail type is what the closest category that explains the reason for the income account. The closest one that we can select would be the service fee for the income. We could put a description in here. We could say client monthly fee that we charge. And then when we're done, we are going to click Save, and it will show up in our income section on our chart of accounts. And there it is, retainer income. Another income account that I wanted to set up is a subscription service income account. So you provide like valuable information to them on a monthly basis, or it could be like a one-off transaction where they call in, they ask you for advice, your consultant fee, whatever it is. You can code it to that service account. So let's do that as well. We're going to go to new account. We're going to name the account. Let's do subscriptions service income. You don't really have to put income in there, but for transparency and for you to know, subscriptions, for you to know what this account is for when you just take a review of your profit and loss, this will be on there, and you can know that, okay, this is for the clients that had a subscription with us. That money is coming into this account. So we're going to click income again, and we can do service fee income as the detail type. Now, this account type is very important because this is the account that flows into your balance sheet as well as your profit and loss. The detail type just gives it a more detailed overview of the reason why we are setting up this account. So we're going to click save. So there's a couple of things that you can do with your chart of accounts. We're going to set up a in expense account because I wanted to show you how to do that as well. And you would just go through the same format. Let me see if it is here. It should be here. Let's set up the water. I think we have a utilities account in here. So I'm going to just say water expense. Let's not do water expense. Let's do utilities. I believe it's here. Let's do utilities. Actually, you know what? Let me do it again. We're going to go to new. We're going to set up utilities for our expense account. We're going to scroll down to our expenses, and we're going to click expenses. The detail type is going to be utilities. Now, it just so happens that Books has a detail type for utilities, but if it didn't, we would just pick the closest one. So I think it had other business expenses here. You just pick the closest one possible for the reason for that account that we're setting up. Now, you see 2 here. I did that purposely because I want to show you how we can get rid of the duplicate accounts. So I don't know if it's going to let me save it. Right. So we'll put utilities 1 for our account. Now we can do that 2 ways. So we have 2 accounts for the utilities. And what we can do is we can take one account off, or we can merge the 2 accounts. I have to caution you though, once you merge these 2 accounts together, you have to make sure that that's exactly what you want to do, because once you merge, you cannot unmerge those accounts. And if you have a lot of transactions in those accounts, it could be really time consuming to try to figure out and separate those 2 accounts. So let's go to our utilities. And here we are. So we have utilities and we have utilities 1. We're going to keep their utilities that was in here, and we're going to just delete the one that we just created. So how you would delete that is you could go to the drop down, make it inactive, and then it will delete it for you. If you say, oh no, I made a mistake and I need that account back, you can just go up here to the right of your screen, select the gear icon, and select other income inactive accounts, and that will pull the account back up into your chart of accounts. It will say deleted because you did make it inactive, but all you have to do is click make active, and then the delete that was by it will go away. Okay, so we're going to make that inactive because I don't want it to show on the P&L. Okay, another thing I wanted to focus on was the equity. So we did the balance sheet accounts that we needed. So we've set up our income accounts. We did the profit and loss accounts that we needed, which we set up 1 utility account for our expenses to track that when we have to pay it. And then I wanted to focus on another balance sheet account, which is your equity. Now, this is a sole proprietor account. It doesn't have the equity catered to the owner's transactions that they would do within the business. So we have to create that. For a sole proprietor, you would have two equity accounts. You would have a owner's draws is what they call it. And that is to basically track any money that the owner takes out of the business. So we're going to do that now. We're going to go up to our new account. It is an equity account. So we're going to just put owner's draws. There's other names out there for it, but for simplicity sake, we're going to leave it as that, owner's draws. We're going to select the accountant type that wants to show up on our balance sheet, and that is an equity account. The detail type is the same thing, owner's equity. And you don't have to put any opening balances in here and as of date and description. If you like, you could, but for simplicity purposes, we are going to just set it up and click save. We also want to show the equity account, which is an owner's investment or owner's contribution. And this tracks the money that the owner would put into the business from any personal funds, any personal accounts that the owner may have. So we're going to set that up now. We click new account. We can put owner's contribution, which I like it because it's just really simple, or you can put investment. We can leave it like this, or we can just put contributions. I think I'll leave both so that you guys can see. The whole purpose is to just track those accounts, money coming in and money going out. So we will click equity because it is an equity account. We want it to show up on our balance sheet. And then we will click owner's equity. And we save it. We scroll down to the bottom and hit and click the green save button. And let's scroll down to see if we have our equity accounts. And we do. We have our owner's contribution investment and our owner's draws. I also wanted to create a bank account. Now, when you go through the whole process of setting up your subscription, it would allow you to link your accounts. These two arrows that are focused here on the bank and the check-in, the account type and the detail type, these two arrows are signifying that these two accounts are connected. And one way you can see if these accounts are connected is that you can go to the bank transactions, and you will see that the checking and the savings and the MasterCard would have those arrows as well. And that will show you that they're connected. You would just go to the link account and then follow the prompts to connect those accounts. For security reasons, we cannot connect a real live bank account, but we're going to set one up in the chart of accounts. So we would just go back to accounting, chart of accounts. And I want to delete this account. I want to take this account and make it inactive, and I want to put my own account. So let me create the new account first. So we're going to click new account. We're going to say that this is no name bank for our no name company. And we're going to select account type, which is a bank account. And this bank account, we want it to show up in the assets on the balance sheet. So we're going to click the account type of bank. And then the detail type, this is a checking account. So we're going to click checking. And then we're going to go down to the bottom of the screen and click save. So you see our no name bank account is here in our chart of accounts, but it is not connected. So you would see that there's no reversing arrows by the bank as opposed to this one. So our new bank account will not show up in our bank transaction screen because it is not connected. But this one and the savings and the MasterCard will show up because of those two arrows. So what I'm going to do now is I'm going to take off one checking. So I'm going to click the arrow down at the view register action button over here, and we're going to make that account inactive. Now, once you make that account inactive, it will not show up in your bank transaction screen. So I'm going to show you that now. We're going to hover over to accounting, and then we're going to go to bank transactions. And you see here, the checking account that was in there is not there. It's just the savings and the MasterCard. Now, for our no-name bank that we just set up, there's no activity that's flowing into the account. All the activity would sync with your bank, and then the bank will, QuickBooks will pull that activity of the transactions that you do day to day. They will pull it into the bank account. But we don't have any activities, so I'm just going to show you just a transaction that we could follow to get some activity within that bank. So I'm going to create that transaction in the register of the bank, which is view register here. And then we're going to create that activity. So let's say we got a deposit in from someone who wanted to retain our services for a fee. We charged them $200 per month, but we're only focusing on 1 month right now. So we got a deposit in for $200. So I have to create the transaction. So we will go to deposit. It's going to be for 12/30/2025 because we're focusing on 2025's tax year. It is going to be a deposit into the retainer income account, and it was for $200. We're going to click save, but I just wanted to let you know that in QuickBooks, there is a two-sided transaction. So the two accounts that are affected is the no-name bank, which is our checking account, and this is the sales, which tracks the revenue that we get in, which is retainer income account. And I'll show you. We click save, and we have a deposit in there for $200. Now we can go in and see which two accounts was affected. We just click on the transaction, we go to edit, and then you go down, you scroll all the way down here to this more button, and you click transaction journal. And the transaction journal will show you which accounts get debited and which accounts get credited. So this is kind of like more the accounting lingo. The no-name bank would get a debit balance because a deposit came into the bank. So when a deposit comes into the bank, it increases the balance and it has a debit. QuickBooks and accounting, now it works where one account is debited, the other account must be credited. So the retainer income, which tracks our revenue, has a credit balance, which means that that also increases, but it shows the amount of revenue that we've gotten in from that transaction of someone hiring us to do their advising or consulting for their business. So to come out of this screen, we go back to reports, and then we go back to our chart of accounts with accounting, and then our chart of accounts. And as you see, our no-name bank, it was zero before, but now we got a deposit in for $200. So the $200 shows up in our chart of accounts. So setting up your chart of accounts is not a one and done task. As you go through your business and figure out what accounts you need, what accounts you don't, you're constantly customizing it to fit your business and what's going on in it. If you're unsure and you want me to help you customize your chart of accounts based on your industry, you can click the link below. If this video has helped you, please like and subscribe. And as always, you're keeping incredible service simple with Steph. Thanks for watching. Be blessed.